I've never been more bullish on kind of this space, and the opportunity that exists within this space now, for sure.
Ooh, oh yeah, man! I was trying to
Good.
really get myself framed properly in this sort of thing, and then we go live, and I'm like, anyways, back with episode 80 of Internet Explorers. Very excited to have Jarrod Dicker. I realized I was writing JD on Twitter earlier, and then this other guy came to my mind when I wrote JD, and I realized I needed to refer to you as the cool
Yeah, I know.
JD.
I lost the title.
That's all right. Yeah. I mean, yeah, the provenance on the vice president, I guess, is slightly stronger. So yeah, Jarrod's gonna be our guest today. Josh is hanging out over in Consensus in Toronto, where it is warm and beautiful, and I'm in spring rain again. But it was a big week on the internet. New metas emerging that kind of have touched on a bunch of the themes that I think we've touched on in the past, Jarrod, and on Internet Explorers as well. So we're going to dive into the topic of internet capital markets. I think we called them token launchers. The kids calling them internet capital markets.
Yeah, we used to call them ICOs.
A long history here that I think maybe is forgotten, not known, probably relevant and important. So I think we'll get into that. We are going to, dive into that. I think all these topics are so closely related, but I think this will be a bit more of like an exploration conversation than diving into all the hot things of the week. Though we're of course going to talk about Believe, and we got some other stuff. I would tell you what those other things are right now, but I can't find the list that I wrote, and so we're just going to go and magically explore alongside. Yeah, well, I always send it to you. That's the easy way to go. How we doing, Peace?
Exceptional. What a week. What else can be said?
What are we eating? You get some food here for us today?
It's not that exciting. I have one banana and one orange and a big glass of water.
I mean, I think that is exciting for me because you're just consistently eating when we come onto these shows, and I get to know what it is. Seems fun. What's going on in your life, Jarrod? What are you up to on the internet?
I mean, before we tuned in, Peace told me about the Mantis people in New Jersey, so I have that all over my computer.
This is such a Peace thing to do. Like right before we go live, he'll start talking about the most abstract thing, and I'll be like, "We got to stop here and actually talk about that on the show." This is brand new to me. So
yeah, I mean, and like apparently it's like this belief that also all praying mantis can grow to full size.
And uniquely a New Jersey thing for some reason.
Yeah, which like doesn't look. I've seen praying mantis in New Jersey, and I think still a law that you can't kill a praying mantis.
That's a law.
Yeah, I think it's like a federal. I think it's like a federal offense if you kill a praying mantis or get caught killing a praying mantis.
Now we know why they're getting so big.
Right. So I wonder if this has all been like a coup, right? For like the eventual takeover. And I mean, they blend in really like well with the trees. I mean, from everything I'm finding on Google, like this has been, an elaborate plan for a long time. So
I mean, like even a 4 foot tall praying mantis would be terrifying.
Yeah.
Totally. Yeah. 7 feet is insane.
Yeah. So
yeah, it's new to me, but it's in the crypto to cryptid adjacent world. We're 10 clicks away from this stuff. So
it's gonna raise the seed round and just take over. Yeah.
Conspiracy tokens. That's the new method. It's just basically a Zora clone, but with conspiracies, and the market will determine what is real or not.
Yeah.
I love it. Cool. All right. So this week seemed to be about the new meta of internet capital markets, really driven by the launch and some successful launches on top of a new app called Believe. I'm sure you all are deeply aware of it. Let's start with more of the Believe focused stuff, and then we can kind of get into some of maybe the where it's at today. So Believe is, I think around this general trend of more and more tokens, and I think the specific angle that Believe is going after, and Believe's been around for a while. Ben has been building this for a while. It's taken a few different turns. But it's this idea that Web 2 founders can launch a token as a better way of raising capital for their project. And they had a few big launches on it, and then like a wave of new projects launching, and have done millions of dollars worth of fees. And I think importantly, I don't even know how you'd value the amount of attention that it was sort of coming to a bunch of these projects. Hasn't been without controversy though, and I think with all these new metas, people are both trying to make them real. Seems like there was a very strong concerted effort to go make internet capital markets a thing, which, in my opinion, feels a little forced in some ways. But also a lot of teams, people who are builders out there going, "Oh man, VC doesn't make sense for me, or I want to go a different path." And there's stories of a bunch of teams really making a bunch of money off of doing this. And so I think it's a very fascinating general area. I think it's a huge design space here. I also think that the current state of belief in these things are suboptimal in many ways, and I think a little naive. But generally, my take is it's a very exciting space to play in, and I think very relevant to kind of where all this vibe coding and the cost of building, et cetera, goes to. So, a bunch of tweets you can get into here. You can talk about a couple of the projects. I know a couple of the guys have launched projects here, and I mean, what's your?
Yeah, I mean, like I always try to approach. I mean, you say like the internet capital market thing feels forced. I mean, that's like crypto, right? Like we find like a meta and something people could get around, and I feel like a lot of attempts in crypto are like very obvious, like in a topical sense, like even in a superficial sense, it's like, oh yeah, like there are problems here. This is extremely valuable, but then as you kind of get more deeply in the nuance, you're like, oh shit, this is why there's been challenges in the past. I always try to keep open mind on all of these things, and there's like a lot of things around believe and the hype around it that gets me excited. I mean, to the point that you made, like I feel like these platforms really flourish, whether it's Web 2 or Web 3, when they're really servicing customers that are somewhat underserviced. And I think to the point that you made around like app developers and people having like a venue to like launch their projects, launch their ideas, like this could be a really cool venue to start experimenting in. Like I saw a stat this morning that 1% of apps in the app store do like 100,000 in revenue per year. So like when you think about the desire for some of these app builders who oftentimes are creating multiple apps a year, like it's a highly experimental space. It's could be somewhat ephemeral, which is very in tune with kind of crypto markets and crypto behaviors, like high velocity moments, taking advantage of that velocity. I think it could be highly attractive. Believe, I think, has done some interesting stuff as well. Again, it's kind of like the challenge ahead of them, but you see Ben tweeting a lot about it, which is like what really differentiates this launch pad from these other launch pads. And the idea that they're curating applications to kind of highlight on the storefront. Yes, anyone could launch launch within Believe, but the team is pulling together like the best projects, trying to highlight the best projects and give a more kind of like curated feel around that. I think is like a desire to kind of make this more legitimate and kind of show that it's been somewhat vetted. It also is probably an attempt to attract users that have been kind of burnt out from the trench game, like basically say, look, like Pump Fun is growing and explosive, and there's these other ones as well, but like this could be a platform where there's like real projects and it's benefiting the founders, and you could get early exposure to these companies before they start to take off. So I think a lot of the narrative and the storytelling around this is really trying to cater to that.
Yeah.
The one problem that's just a persistent issue within crypto is kind of like the consumer, like the mercenary type consumer. And I think some people, and again, Believe's doing this very early on, they're saying, look, there's anti-snipe mechanisms, there's ways that we could try to avoid non-committed long-term durable buyers from getting into this space. But I don't even believe that, no pun intended, that that's like the major issue. I think the major issue is actually how do we come up with token design and incentives that make people want to hold on to these things, that feel like there's value in the long term, right? Like, right, whether that's like obvious stuff like revenue distributions and things that hopefully, from a regulatory perspective, we start to work out soon. But those problems are just going to continuously persist. So I think it solves a lot of problems, especially for like some founders, app-based founders, people who want to launch things that don't want to go through the app store. Like I could see in my storytelling mind like a lot of synergies between like how traditional media got blown up through platforms like YouTube, and nobody believed that long-term creators could actually be the big heads in media, and these platforms really enabled people like Mr. Beast, the Pauls, others to kind of like have a platform and showcase that these media brands, right, aren't necessarily the gateway to success. You can kind of see that more on like the engineering, app developer, creative side as it relates to this, but that doesn't come without major problems that I don't think are necessarily unique to Believe. I think they've been industry-wide issues that we dealt with in 2017 and 2021 and now. So that's kind of like a
Yeah,
holistic
it's such
perspective, I'd say.
it's
Shit
such a
I've been
deep topic.
thinking
Yeah, I mean, it feels like, I often think about the crypto market as sort of there's two kind of two philosophies to approach it with. I guess there's sort of this consistent novelty seeking and speculative games that emerge. And so you talk about ICOs, you can talk about social tokens, NFTs, AI, internet capital markets. These are sort of like there will always be a new novel thing to go speculate on because that's what crypto is really good for. And then there are businesses that are able to, that I call compounders. They're the ones that are able to play across all of these different narratives that emerge, right? And so it's why exchanges have been such a powerful business. It's why AMMs, it's why L1s, L2s, very, very valuable businesses so far. And I think the issue I see here, the fear that I have is that people don't know what game they're playing. Right. And so it's very clear that this is to me at least, maybe I'm wrong, that this is another one of those novelty or speculation loops, right? And I think what we've seen in cryptos, those have been compressed in duration quite a bit. And this sort of speculation loop is because, or novelty loop is because they do not generate value outside of the speculative demand for it. And so they're going to be very, very popular, very hot early project. What you get is these new early projects launching. They get the benefit of both the early focused speculative demand and attention, which I would argue is actually probably the biggest thing that, well, let's just say those two are hand in hand with people coming in, right? But that value actually starts to the app launcher actually starts to decrease as more and more apps start to launch. And I think, you've seen the team try to address this in a certain way. But I'm not sure that's actually the full core issue, right? And so I would put this into the bucket of another creator token or personal token or brand token. And I guess the structure with which they're launching these on actually also is very limiting in many ways, right? And so I think if we were to look at it and say, hey, meme coins are and I believe meme coins are really great predictors. They're really a great way to get a community involved early on. But when you sort of look at like maybe some of the bigger, more valuable meme coin launches, let's use Trump for an example, they're not using a bonding curve. Right. And they're actually holding back a bunch of tokens. And, I think there's so much. And when I was just listening to the Dupe founder talk. Dupe was one of the projects that launched on Believe. Great dude, great product. Got to hang out with him a bunch last year. And what they want to go do with it. And he gets crypto. He's not one of these just, Web2 founders who don't get it. But everything he wants to go do with it is always they're the things that we all want to go do with tokens. Right. It's like, I want to be able to reward people with these tokens. Okay, well, you got to have a supply to go do that. I want to be able to, you said for growing my ecosystem. I, maybe at some point in the future, I actually do want to go raise some money. But all these sort of things when you're doing a bonding curve launch and a full distribution of tokens are really suboptimal. And when we look at the ones that have done really well, outside of maybe some of the few that have broken up from Pump.Fun, they have very different structures to them as well. And so I think I'm both very bullish for all the reasons we talked about before. And also, I think we're still dealing with regulation. They want to be able to buy and burn tokens. They want to be able to, return value to them. Again, that comes into being a bit more of a structural issue with regulations. And I think so much of what people will naturally want to go do with these things, they're going to be limited in doing because of the economic model that they launch with. Not to mention the other thing I'm thinking about is like, when you talk to really great founders, I just spent the last few days in New York at the USV Portfolio Summit talking to CEOs from public companies all the way through to doing crazy stuff with AI. And across the board, those folks, some of the best founders around, when you talk to them about how they decided on who their investors should be, they were very, very, very thoughtful about how they brought those people around. And one of the main sort of criteria is, are these folks long-term minded?
Mhm.
Right? This is going to take some time. I'm investing my heartbeats in this thing over a long period of time. It's probably not going to work right the first time. And so I want to have partners who are with me for that drive. And I can think of no worse group for investors than retail token buyers.
Yeah.
Right.
Yeah.
And so what that leaves me to believe is that outside of maybe a few, that anybody who cares deeply about the thing they're building, so whether that's I would say a personal tokens they're doing about their brand, or it's an app that they care deeply about, they should think twice about launching just using a pure meme coin launchpad. There are exceptions for sure. These things are gonna rock and roll, but it seems to me like that's maybe one of like the pieces that if I can just YOLO a token out on Twitter, cool. But if I've been trying to go solve this big sticky problem or deeply enamored with this specific type of an app, launching a meme coin's probably not the best way to go.
Yeah. Yeah. And like to that point, it's like there's short-term games and there's long-term games for a lot of these founders and their companies. And I mean, we kind of said this earlier, like while internet capital markets is new, right? It echoes and rhymes with a lot of what we saw with the ICOs. And I was the CEO of an ICO company back in 2017. And you know, you learn very quickly that once you launch kind of a market around your product, you effectively have two different customers. Like you have two different roadmaps. You're the same size team, but you need to prioritize different things. And the reality is that the token price takes over. The token price takes over in terms of having to cater, to these buyers, who, are otherwise, nowadays investors in these companies. They very likely don't even use the product that you've created. They're purely speculating or, kind of underwriting updates or results that the founder's saying through Twitter or across other mediums, and it's really difficult for a founder to build long term in that sense. And I think those challenges absolutely persist here. Like once you launch that token, even if you're saying like it's not connected to the product or it's completely different, regardless, you're going to have to cater to that. And especially in this sort of regulatory environment, like you want to make sure that you're on that and are kind of like focused on that, but it's extremely distracting. And I think like along those lines too, um the fundamentals by which this is now being marketed still aren't necessarily allowed. And I think we've seen kind of an evolution in some of that language and people kind of like go back and re-edit what they're saying. But you want to say you're investing early in some of these companies that are launching through these launch pads. It's not equity, right? Like you don't you don't have a stake in the company, you don't have voter rights. The rules could change at any moment. Like you are purchasing tokens, and the incentive for you to stay within kind of your engagement with these companies is that token going up, and your kind of sales strategy like over that long term versus really kind of seeing how this develops. Now that being said, I think Launchcoin, a lot of the dynamics that are built within it are interesting, right? Like as new companies launch, if those tokens feed back in, you have a similar sort of like system that we've seen through virtual, which could be interesting in the long run. But I do think that there's a lot of work that has to be done on the regulatory side. There's the fundamentals in the token design that I think, regardless of like how great your product is and how good the token's doing, like we still don't have the right mechanisms that are going to keep
Yeah.
people in. And something that you said earlier, which I think about all the time, is, today at least, there is a crypto customer, that we target for we being like the royal we industry wise that we target. And effectively, a lot of it is like vampire type moving over. That's why every L1 has the same suite of apps. And that's why so much of the direction and go to market is the same, because we're just looking to kind of like pull people that already exist within the ecosystem. Well, there's a ton of negatives around that, right? One negative is that you already know right, the behaviors of those consumers, and those behaviors are probably going to continue and persist within your own platform. There eventually has to be a bottom, right? Like there's only so much capital. It's like subscription businesses in media or in SaaS products. It's like there's only so much money that could be spent, which outside of crypto is completely subsidized by advertising, which kind of comes in and gives people free products to use and experiences to leverage. In crypto, it's basically all kind of like one-to-one transactions. Like you're effectively not engaging with crypto products unless you could transact. And again, there's only so much money in that pot right now if we keep within this same pool of users. So it's interesting. Like I think it's very interesting on the launchpad side that we could start to get Web 2 founders coming in and they're seeing value in this, minding the fact that like hopefully it's not purely extractive, that they do actually believe and see value in these sort of mechanisms and platforms to launch. But there's still again the challenge on the audience side, which is like, how do you get more users in? How do you get more people comfortable with this platform, or with this sorry, not platform, but like overall ecosystem? Because we're going to need more and more people kind of coming into these experiences to actually scale this to the point where people actually feel it's different and nuanced. And just to end that point, right, one of the largest um, complaints around all of these things is that it's so extractive to the point that so much money is being taken out, mostly of like the Solana ecosystem, and not being put back into the ecosystem. Like people are making money off these token launches, right? It's been memes, it's been AI tokens, it's been celebrity tokens. Now, it's companies that are going through these launch pads. But like once people make that money, if they aren't holding long term, like where is that going? Is that going back into Solana? Is that going back into the ecosystem, or are people just like putting it straight into stable coins and right into their bank account? Right. So I think a lot of that is like a bigger thing to think about.
I mean, I think that like the extraction is still around. Like it is very hard to form markets well in a decentralized way, right? You do not have identity. You don't know who's participating in these pools. You don't know if there's insiders doing stuff, sort of given a heads up by stuff like that. And so there's a lot of, I think, you can see a lot of sniper activity happening in these types of pools. Obviously, it happened to Zora. It happens to Pump as well. And so I think there is the long-standing trend of it is very hard to go spin up a market well. If you're too popular, it's hard. If nobody cares about you, it's hard. If you get it just right, there's a lot of things that can go wrong. And it's interesting to me that this really simple mechanism, which is a bonding curve into an AMM, has caught on so well. And I think it's done that because it's really easy to understand, and it is probably very profitable and valuable for early market participants in it. But again, I think leaves a lot to be desired if you're really trying to set up this thing for long-term success. And yeah, I think so. Snipers extracting, there's a ton of fees on these sort of things. And if we haven't said it before, fees are the other sort of, I guess, innovation here is that fees from volume are what is going to the founder. So this is a very Clanker-esque model from what I understand.
Yes. Yeah.
And so those fees are being paid out to creators in a mixture of the creator's token, or I guess in this case, the founder's token, and Solana, the sort of base pair. And so there's some optimal or suboptimal things there too, right? You're raising money, but it's revenue, so please pay your taxes, folks.
Yeah. Right.
And a bunch of your fees that are probably being displayed in dollar value are actually in your token. And we all know how much these early speculators love it when teams start to sell their tokens. I think those tokens being used as a way of sort of incentivizing ongoing activity, et cetera, probably makes a ton of sense. But I think the way they framed the sort of, you can't claim your token fees. You can only claim SOL fees right now from Believe. The reason they're doing that is because they know that people are just going to fat finger and nuke these things quite regularly. And it's sort of like an anti-rug piece there. And so there's going to need to be some other sort of figuring out there. So, and all that to be said, it's fascinating to me, right? Like this idea that you can just be like, I'm vibe coding a thing, I'm going to launch this thing and it can work. And then I also think that there's so much opportunity for great founders to take this sort of meta and actually deeply integrate tokens in, or build until we get some clarity on a regulatory front type of thing. Because if I sort of look into the future, raising with tokens or using tokens in a way that brings your early users around, it can form capital, it can be used as a great way to break out of the obscurity that we're all fighting against here on the internet, is incredibly exciting.
Yeah. Yeah.
And we've said like the sort of two-part for City Club is like we believe there's a ton of value in the social capital and that tokens can price that, and that's what I think is happening here. The second point is, but we just really don't know how to do it well. And I think that is the same today. Like it can work in little pockets, it can work for a little while. If we sort of look at the history of token models and token launches, really the best ones have been novel and innovative in some way themselves, right? The mechanism itself is inherent to the platform or product or protocol. And my guess is that still like some of the more consistently, most valuable protocols will have a structure that kind of gives them a lot more flexibility than launching a meme coin. I think there's also this thing that kind of came up in talking to some founders where they see like a meme coin as being separate from their future network token, right? So we can go be in market, we'll be with the meme coin, people can have fun with it, etc. We'll use it to kind of drive growth, and then at some point we'll want to launch our own network token. And I think that's a really interesting idea. I think it suffers from the challenge of you're damned if you do and you're damned if you don't at some level. Like if you can't get any volume on it, clearly a failure. Maybe people remember that. That's actually probably not the worst outcome. If you are building something big, your meme coin takes off, it becomes worth $1 billion. How do you launch a network token on the back of
It's
that?
going to be hard to ignore that. Like it's like I mean it just like for all of these things, I think the challenge that most founders deal with as it relates to crypto, because tokens are so critical to like, the whole philosophy and incentives of an ecosystem, is that how do I prioritize my attention and not get distracted on, what this long-term goal is. And that could be as simple as like when I launch a token, that distraction starts to come up, or to your point, like, we're launching a meme token not connected to what will eventually be an ecosystem token, but that token is blown up. You got like people in crypto play the game on the field because everything just moves so quickly. So I think it's really hard to develop models on that. And to the point that you made though, I want to see this be like pushed to the limit. Like I think that's where the most interesting stuff comes about. Crypto's like and I use this analogy all the time, so it's probably like boring at this point, but it's like the best part about crypto and the ethos behind crypto is that people push the limit regardless of like what the prohibitive restrictions look like. And it's very similar to Napster, right? It's like the whole change of the music industry. Like if people were concerned about the rules, even the laws at that point, then who knows when digital music would have come to pass? Who knows if it would have been as cost effective for consumers as it became? But you really kind of like broke everything down and forced kind of, incumbents, but even entire ecosystems to rethink products and models that in the end best fit kind of consumers needs. And I feel like crypto is that. It's like, let's push as far as we could go. Yes, there's regulatory hurdles, there's headwinds, but there's different ways that we could go about trying to like push those down, whether that's like brute force, i.e. like lobbying, spending a ton of money, or it's things like stable coins, which is like probably distributing crypto way wider than any product or project ever could. And most of the incumbents have no idea, that it's kind of like in their walls now and then could expand beyond that. So I want to see it go as far as it could go. And I think to your point, Clanker, what Believe is doing as well. I think they're really even starting to experiment and think about the incentives for creators. Like, how do we keep creators in these platforms? Well, they get a fixed set of fees. It incentivizes creators to kind of maneuver their products and their communities in a way that is more durable and long term. Now, what's that going to be, right, for the users and the customers, so that people just don't get caught flat-footed? So that's where I'm like fascinated, and which again is not a novel idea. I think every single company building in crypto thinks about this constantly. But hopefully, as we start to see like endeavors towards, the sell side, creator side, we start to see it towards the buy side and consumer side as well.
Yeah, I mean, I think actually what Austin's getting at here is probably a good way of summing it up. Like internet capital markets require incentive alignment, coordination, and structure between both builders and traders. Without that, we have sparkling meme coins. And I think in crypto, we've had sparkling meme coins forever. ever. Basically, that's been the dominant thing. And I think right now we sort of start to squint and see some potential to actually tie these things closer together. And I think that's ultimately going to be the piece. What people want, what people are buying when they're buying into Believe or a Clanker token, et cetera. So they are investing. This is the word they're using. We can't use that word if you're launching one of these products, but that's ultimately what people see. It's the strongest call to action. There's data that a bunch of founders have shared with me around that. And I think that's when you see people talk about it, that's what they want to go do. And I think, until there is some meme coins will always be a category where a small number of things just break out into the attention game and you'll have attention market value around them. But I think for these other things, there at the very least needs to be some uh, strong narrative hint mechanism that's bringing value back into the token. I think everybody who's launching these things intuitively feels that. But I think that, again, if we think that's the end state that we will eventually get to, it would really warrant thinking back from that state and where and what you would want to be, how you want your token structure, where you want to be as an organization to be able to really leverage that. And I think, some of the Believe apps have raised VC, and they're sort of seeing this as a digital collectible that they can really integrate it. And I think those ones are going to have a lot better chance at actually making this thing stick than maybe others. And yeah, I agree. Let's push these things to the edges. I love it when crypto Twitter starts trying to freak out over defining new terms, etc.
Yeah. Yeah. Well, like the best, the thing that always gets me in crypto is when they look at like annualized revenue on these things. And it's
Oh
like,
my God. Dude, these thread guys are like, they should just delete their accounts. This sort of stuff, like a $1 billion annualized revenue or run rate. Or you looked at a 2-hour window or
yeah,
something like that, and just can't like multiply.
yeah. Well, like it goes, but like that goes back to like how you expand the pie on the buyer side, because even in a situation where and I think about this all the time. Like I wish we had the 2021 ideas and founder energy that was so like broad
Yeah.
and elastic in different categories in this environment, right? In the best possible crypto environment that no one could have imagined back in 2021. Um, but unfortunately, there's been like a lot of burnout, or people feel like they can't, or crypto's gotten a little boring because the things that work are actually like crypto becoming part of the government is just like not the reason I got into this. Like it's backwards, but like that's kind of like the world that we're in now. But those ideas like coming back, I think, start to become, more and more interesting. But the real question is like, if we don't expand the buyer pool, do any of the buyers actually like want what we're putting in front of them, which is better means of capital formation, right? Better ways to bring product to market, better ways to incentivize users from using apps. Again, all of this makes complete sense. Crypto is very unique in its ability to do this. But if the existing buyer pool for the most part is just like, nah, like my goal is to like snipe early. I only buy sub 1 million tokens. I'm looking to sell. I shill it on Twitter. I'm trying to create like annualized revenue numbers to try to get other people to buy in. Then like it's never going to work in the way that we're looking for it to
Yeah.
work. There needs to be balance on both sides. And I think that could happen, right? It's just like what's going to be the thing that expands and gains interest outside. Like we have the stuff like stable coins and other means like starting to do that. But I think as these things start to continue, it becomes more interesting. But it's also a question of like, are we ready to shift? Like there's multiple sides, to kind of the Austin point of the equation where like consumers and builders, or buyers and sellers, like really need to kind of like be lockstep, and that can happen through incentives, but it's also a mental decision that people have to make. But I think that all starts with like expanding the pie. People that, I mean, we've both been in crypto for a decade, and it's like you're kind of like fixed in a mindset, and because of our jobs we could kind of think outside of that. But if you're a pure buyer in crypto and you've only been in crypto, right, you're not necessarily changing what's worked. So we need to figure out like what those catalysts evolve to. So.
There was a good Alexander post, I don't know, one of his long posts, but he was making a pitch for XRP. And one of the points was they have a much older crypto buyer, and that was seen as a benefit. And what came up for me with there was just how monolithic founders, token launchers treat their end buyers, right? And I think so much of what we're seeing right now is because for the last number of months, the net new buyer what has been a trencher, right? These are the people who are participating, and so it would be dumb not to target them in some way, because otherwise, who the hell's out here,
Right.
buying these tokens? And I'm not sure that we shouldn't assume that's just going to stay the same. I think, right? I think that'll be a big category, and I think probably not even fair to describe trenchers as just one group, right? There's a bunch of groups in there, and so thinking about who you want your early token holders to be, it's got to be right up there in your game plan for
Yeah.
launching a token.
Yeah.
Um,
And again, the challenge is like what we were saying earlier, which is in traditional internet, right? Outside of crypto, you've had subsidized experiences through very large like swaths of liquidity through advertising, right? It's like brands see the value because data was the engine, and they're targeting users and they're converting on products. So like you could launch more products, you could engage a broader set of users and give them experiences that are interesting that could capture them and bring them in, because it's not just subscription. You're not just paying out of your
Right.
wallet. Subsidized, like, there's a subsidized experience. I always think about like what that's going to look like in crypto. Like, is that the institutions starting to come in and buying Solana and buying ETH and buying Bitcoin, which then could have some sort of maybe like trickle down effect that gives more leverage and leniency to people to be able to build products. But I don't know. Like, it's definitely not brands, it's not advertising coming in, it's not going to look anything like that, but there needs to be this like new form of liquidity that comes through. And I also think that makes crypto products better in a situation like that, because I think both the buyers, if you're launching a token, there's expectation from those token holders as to like what performance and price should look like. Even on the VC side, right? There's a lot of chatter, which is basically like, I can't get funding for my consumer app because so many VCs just like don't care about consumer. And I do think that's true, right? I think there's a lot of truth to that. I think there's a lot of truth to like pattern matching what consumers should be, as it relates to metrics on blockchains like TVL and fees. And anyone who's ever built a consumer knows that that comes last in, in the non-Web3 type world. It's like you want to, you got to build a product, you want to drive interest, you want to get product market fit, and then you have to figure out, is this something worth paying for? And then you put that in front of users and hope to God that, they see that value, where crypto has always been the inverse. So I think if there's like a broader, like a broader environment for founders and a more deeper understanding that like, hey, look, like some of these products may not make, 100 grand in the first 6 months. However, they're broadening the use cases of crypto. People are leveraging them. They're getting stickier with the products. Like, I mean, one of our companies at TCG Crypto, which is, they basically created virtual artists, Hume.
Yeah.
Hume has been a crypto company from the start. They have artists like Angel Baby, Death Pixies, so forth. What's most fascinating with like what they've done over the past 2.5 years is that 3 or 4 of these artists have over 500,000 monthly listeners on Spotify. They have millions and millions of streams on their tracks. And like none of those users probably know that like this is a crypto-based product, that, it's virtual artists that's interchanging and, connected to, a lot of the crypto financial fundamentals and ecosystem. But those sort of things I think start to become interesting, because without those things, then we can't figure out how to further monetize like down the stack in a larger pie. So we need the larger pie. And it's like, how do we get to the larger pie? Is it liquidity? Is it being able to fund ideas where expectations are like, hey, build something that a lot of people are going to use, and you have a year or two and the expectations are to do that? We're not going to knock on your door and ask when you're launching a token in 3 months. So there's a lot of things that need to be true there. But anyway, that was a ramble, but hopefully.
No, this is a ranty show, which I like. I mean, there's this, I don't know what to call it just yet, but I think with Believe, and I think Alex Masimich launched 10K yesterday. Both of these are sort of interesting money apps in my mind, because like you download an app and then the very first you sign in, you've been given a wallet, and really the only action they're asking you to do at this point is deposit money into this thing, and then they're going to give you things to go speculate on. I think we're just going to see infinite versions of that in various niches, probably come up. I expect our DMs and email intros will have a lot of founders pitching things like that. And I think it is a really, Josh always talks about this idea of social context that make buying and selling tokens interesting. And I think we're starting to see that actually start to play out here. But that does feel very different from something like, whether that's Hume or, I was in New York last week with Blackbird. These things are trying to go build much wider, longer, thoughtful distributions around a utility and a real business need, and trying to sort of stitch those things together. So, I think it's super interesting and brings into all sorts of questions of like, is this a market that VC should be playing in?
Yeah.
Or like what way should VCs play in? And I think, I think Peter Pan had a tweet up here today basically saying that, as VC funding continues to dry up, these are going to be far more popular, and that ultimately he sees this world where, the ones that survive through this sort of tough time will ultimately be powerful enough to sort of vertically integrate and become ecosystems. My take on that would be slightly different here in that, and actually say that's the argument for why consumer makes the most sense. It's like they who own the relationship with the customer and are, creating the assets and the context to trade within, are going to be able to own every piece of that stack if they want to. And you're seeing this with Pump.Fun already. I think we'll talk about what Zora's done a little bit later here. As VC fund further dries up, there's a good possibility the ones that left standing last one standing might be profitable apps which verticalize into their own blockchain ecosystems. That would be the argument for investing in consumer in my mind, and that's why VC funding is probably not going to dry up in this space. But
and the thing, and like I think it was David Gabot. I gotta pull it. But someone tweeted. I'll pull it up later. But somebody basically tweeted around the idea. I think it was David from Tapestry. Tweeted, he was actually at the USV summit, but it was this idea that that the feeling that someone gets from their token going up is a phenomenal feeling. And I've felt this way for a very long time, which is like when you're building products, it's really less about the product that you're looking to monetize, and it's more like the emotion that you're evoking from it and being able to capture that, and people feeling like they need that more and more and more. And I think that's spot on. And I think when people say like, oh, well, crypto is just trying to financialize everything, it's like, well, okay, but if you kind of start to distill and break that down, it's like, well, if people like the feeling of like making money or watching or gambling or things of that nature, it's like, well, how do you start to spread that out a bit more? And Dan Romero on Warpcast casted something yesterday, which was like so obvious, but it just makes so much sense. And they've been doing it on Warpcast for a while through like very smaller, like micro transaction tips or airdrops. And it's like you receive $1 or like $2 from someone who follows you on Warpcast, or like, a company could start dripping like $1 based on your participation. And I actually believe that like that will keep users coming back and interested. Like, I think this idea that you need to get a $10,000 airdrop to be interested within a product is probably just false. And the only thing that's been experimented on and what we've seen to date is that when people get those airdrops, for the most part, they're selling them, right? Because it's a tax event, or they're selling them because they've been harvesting. They've been harvesting airdrop. But this idea of like $1 in or slowly dropping things based on people like using product or being interested in product, I think that'll start to go a long way. And you can see synergies between like that feeling of emotion and like getting a follow, or when someone used to poke
100%
for the old dudes like us, or like stuff like that. Like there's shit to capture there that's unique to crypto. And I just think for the most part, like we haven't really experimented outside of the lines of what's existed or what's worked. And
I think I know why.
There's a ton to do that. Tell me.
Well, I want Peace to jump in first. He had something to say.
Well, I just want to say, I do think that this is so sick, but I wish that it said Cello sent you $1, because there's nothing more offensive than being told this and seeing that they're sending me like 86 cents or something. It's just like, that word has meaning to market participants. So it not every airdrop needs to be that, but I was like, oh, are you kidding me? Like, come on, guys. But
you might want to that. Don't bury the lead.
cool
on your notification.
feature as hell. I love getting these notifications because, yeah, it should be
I
that easy.
Yeah. So I think what's interesting here, and maybe we can go to a piece that you wrote recently, Jarrod, and I think there was a line in there. It's a piece that I would say generally gets at some of the stuff we've been talking about here, the challenges of building in crypto, where there's a market participant that has a certain set of expectations that might be very different than who your ideal users are long term. And I think you have a great line in here where you said something along the lines of, we need to be building for consumers or users, not for blockchains. And I think that is, to the point of like maybe a lack of experimentation, a lot of copy pasting, etc. The reality is that a lot of the money and a lot of the opportunity has been about building apps for blockchains, right? So these alt L1s, L2s can kind of have parity with each other. There's a lot of grant money going around. There's a lot of copy pasting going around. It's a great way to make some money if you can just take some open source code and move it over here. And that really, that's sort of I think been driven by the need for all of these chains or infrastructure or big platforms to show really big user numbers.
Yeah.
Right. And we sort of see this industrial factory machine that includes a galaxy and a layer 3 as a way of sort of getting, users up. It includes the centralized exchanges, and it includes the low float, high FDV launch mechanic. And so there's sort of been these sort of models that, everybody says from a retail side, like, this is absolute garbage and junk and doesn't make any sense to me. And I think it's maybe the core to why people don't really believe in the long-term value of cryptos, because these things haven't really been built for the long-term value of crypto. While at the same time, we're stepping into a world where I think, broadly, we all believe that we're going to be able to do a lot of the things that we've wanted to do with tokens for a long time due to some regulation. And it feels like a very important consideration right now. Are you getting pulled into the factory machine, which, is a good way to make money and for some period of time, or is there a sort of a bigger opportunity that you're going at? But
Yeah,
did I get that right-ish?
I do. I haven't thought about the argument against this piece until right this second, but but it is interesting. Like, yes, I think that there is a huge challenge for all founders that want to be building experiences and apps and products like outside of like the presumed default 10 apps that go on every blockchain, because of the expectations of volume, of fees, of whether or not, right, they're going to get the benefits from investors who will invest in them if they do foray more towards that direction, support from the blockchains. It's a major issue, right? And I think it just hasn't really been completely thought out, and the mechanisms aren't there, which is kind of like what I go into in the piece. But the one challenge against it, which I think is just a broader question for all of us, is that should we be adopting the metrics that have existed, or start incorporating the metrics that have existed outside of our industry in order to show value? Because we don't today, right? It's like people could say they have, 1 million users, like 1 million users per month. 99% of crypto companies that say that have no idea who they are. Their wallet addresses that they're calling users, they don't know if it's duplicates. There's no like data in the way that you'd get from like traditional, web 2 products or media, which is like how many unique visitors, what session time. There's some stuff that's been incorporated, but for the most part, when people report on these numbers and have conversations like regarding their platform, it's around kind of like these very large numbers that could probably be broken down and really minimized if you were to look at like, are there dupes, are they uniques, are they spending time, where's traffic coming from, so forth. And that may not be like that may also be a hindrance to a lot of these products, because they're showing volume, they're showing fees, they're showing stickiness. People are using them, right, to either create or engage, consume across. But it's been, and I talk about this, like we've been an industry that has operated in the dark and has kind of liked to operate in the dark for a really, really, really long time, whether it's around like user metrics or, of course, we know all like the scams and that's happened, unfortunately, in this space that just continuously happens and happens over and over again. And I think a lot of that has to do with like the presumed outcomes and incentives of like how we look at crypto companies and how we value those crypto companies. But again, the environment we're in now is fucking amazing. Like for crypto, specifically, not not for everything,
Yeah,
but,
fair.
but for crypto specifically, right? Like, you know, we have Trump like talking about crypto, putting 2 executive orders through crypto. We have a completely reinvigorated SEC that has, you know, shifted their focus exactly, you know, the way in which we hoped that they would in order to help to, you know, promote and encourage development in this space. You know, we have Apple now having to open up the gates as it relates to NFTs and payments. You know, like it's been a fucking fire hose of opportunity as it relates to like builders being able to do what we've always wanted to do instead of what we want to do. And even again, back in 21, 22 have done, unfortunately failed because of those environments, many of these companies. And like, how do we get that back, right? How do we get the funding back? The right funding to be funding the right companies that could get these companies up and going and not just funding the companies that are going to do the same shit over and over
Well,
and over again in order to get these velocity moments captured and so forth. So
and I think that what changes, like I think like the popularization of consumer crypto apps is what's going to change that dynamic. So the dynamic I think has been, you know, a world with you know, for the past say 10 years, very limited tokens to go speculate on, you know, relative to the world that we live in today. And it was one where, you know, it was very much not about consumer applications. It was very much about infrastructure. And I think a lot of the sort of the reason there's so much value or money invested into other L1s, L2s is because people see blockchains as the platform, right? They are the reason ETH pumped was because DeFi Summer created a lot of good speculative games for people to go play, and they had to buy the token to go do that. Same thing with NFTs. Soul pumped because meme coins were doing the exact same thing. I think the question I'm asking a lot right now, and I think it's one that Jacob has been writing about a bunch and shared with us when he was on the show a couple of weeks ago, is what happens when these apps become both the place where new assets are issued and also own the customer relationship and then want to launch a token.
mhm.
And I think it greatly undermines the narrative of L1s and L2s as blockchains, especially in a world where all the stuff is abstracted. You can go in, click buy, and all, you know, the routing, bridging, you know, trading is all done in the background. And so you really don't have the same primacy of the blockchain infrastructure token in the consumer's mind, in the applications. And I think, you know, this post by Jacob here on quote pairs is quote pairs are a model, you know, pioneered by virtuals. When you originate new coins, you set the quote currency as your own token. You token gate your markets and capture the net value of all your coins originated. Zora uses this model today. And I think so the idea there being that anytime you're coming in to buy any asset in this platform, it's in the background turning your ETH or your SOL or whatever into Zora, and then it's also being deposited into an LP. And so there's sort of this quasi staking mechanism, and it ultimately acts kind of like an index token of all the value that's created on there. Very, very L1 like, right? Um, and so I think like what happens when Pump launches a token?
Yeah.
You know,
Right.
we've already see them vertically integrate to capture more value and be able to offer more value to their users. But you know, there's a world here where they go launch a meme coin, and there's a world here where they try to go launch a more utility focused token. My guess is they'll launch a meme coin, but I think there will always be this persistent question of like, how do we get value into this meme coin? And it's very likely that using a, you know, their token as a quote pair is the highest value way to go do it. And so then the question is, if, you know, Pump gets in on another generational run, or the next Pump comes around and does this, does that value flow back to Sol or to ETH or to the base tool that's out there? And it's hard for me to argue that it would.
Yeah.
And so I think what you start to see is these apps will be defined as platforms because they've been able to use their token as a pair, and you know, the value will float to them, and they will continue to vertically integrate either, you know, into pools or into other chains or wherever. And we're just in a very different world. And I think a lot of what we've seen with the, you know, high float, low float, high FDV launches and the charts associated with it are just, you know, examples of the market reacting to this in some way.
Yeah. Yeah, for sure. No, I also think like as things like quote pairs or, you know, Pump or these others, you know, models start to come out, to your point of like, does it come back and feed You know, we may
Yeah.
be in a world where it doesn't. Like we may be in a world where some of these eventually kind of expand out. You know, there's new kind of like dominant players, and the foundational blockchains need to figure out how to manage accommodate that. But I do think that it helps with distribution. Like I do think that these sort of function setups, like what we're seeing Zora doing, what we saw Virtuals do, what we're seeing Believe do, is getting more people in, either which way, whether on the buy side or sell side, to like be able to push more experiences and value kind of like in this ecosystem and really start to see like what and where expands the pie. A boring take that I think is like pretty accurate is that I really do think like a broadened consumer adoption is going to actually happen through like a lot of B2B. Like I think we see it with stablecoin type products. I think we see it with RWAs, which is basically like you may be building a platform that is servicing institutions, which then they start to release consumer type products or experiences that then feed back into that. But I do think that outside of like the natural token dynamics that exist in crypto today and the experimentations happening there, on the other side, which is like people outside of crypto coming in, I do see a lot of value in like these B2B type companies that are effectively like building tech, building software, putting it within these larger companies and institutions, and then seeing how that starts to cascade down. Because I think then at that point, like people aren't even realizing that they're kind of like in crypto or using crypto. However, it may get them to set up a wallet. It may get them to foray into other sorts of experiences, but it does kind of widen the pie where something is valuable and a utility to what they actually need versus just kind of finding it on their own or navigating on their own, which is what kind of happens now, like word of mouth, or my friend got rich and I want to get rich too, or wow, this is really cool that you can mint music or media on Zora. Like, I'm going to get my artist friends to come in. All of that's valuable, but I think massive expansion starts to actually come as we start to think about bucketing these technologies and products and actually selling them, which isn't consumer in the traditional sense, but I think in the crypto sense, it actually will equate to consumer.
Yeah, interesting. I think speculative demand is still the strongest driver of new users, but I don't know if that is like the marginal new user, right? Like people who buy stocks and gamble, or maybe like the meta bucket that we can put crypto people in, and that is a large pool of people. But even within that, I think the idea of gambling on a 30-minute meta versus like a 3-month meta versus a 3-year meta is pretty different. And yeah, I think that's. I mean, I think for me, where the conviction comes from is I think you just need to take people on a wealth generation journey. If you're able to go do that, whether you're an app, infrastructure, whatever, you're going to have a chance of building a cult. Cult is the best type of brand you can have, and these folks are going to want to buy and hold your token to be a part of the thing.
Yeah.
And the more that we can drive value back to it in the future, the more sustainable this thing becomes, and we kind of rock and roll. So, I think
it's kind of a cool part about punks, right? When we talk about like extractive, like people making money and pulling it out, like one cool part about punks is that a lot of people who, at least within that vein and culture of crypto, who have made money by punks, they showcase punks, they like, at least put the capital back within that, or not all of it, but a significant amount of capital goes back into that ecosystem. There's just interesting kind of like flywheels that I think could maybe be studied off that. I
think it's really different if there's a company that's extracting value versus an individual trader, because most of these traders are going to round trip that in some way. Us included. But I think Pump taking out tens of millions of dollars from the Solana ecosystem, that is just profit. And I think that is a major distinction. Interesting to see. I had another point to get to here, though. We're at the top of the hour. Peace, did we forget to get into anything? A trillion action.
Great.
Yeah.
Yeah.
Did we forget it? No, I think we covered our bases here.
What? Yeah. Oh man, I had another thought that popped up, and now it's just like on the tip of my tongue, but not here.
I got a lightning round one for you.
Okay, let's go.
It's not much, but it's honest work, and they almost sucked me into their marketing funnel. These dirty dogs.
Yeah, it's very interesting. This internet capital markets language is very much something that Solana has been pushing in a meta sense, like thinking of bringing equities on chain, all this sort of stuff, and I think Believe and the internet capital market narrative that's popular right now is maybe a different version of it. But I did see Tully tweet, and I think basically the thesis there is that unless you're actually driving value back to these tokens, it's probably not internet capital markets. Whatever. I don't want to get into the debate around trying to
I
define
don't know
these.
offhand, but if you look at the RWA capture, I think like pie chart, if I'm not mistaken, I think ETH holds a lot of that right now. So I also wonder if a lot of
Well, this is the internet capital market is crypto.
Yeah.
Yes. This is it's not. It is the totality of all of this. Crypto is it's a market formation tool.
Yeah.
It allows us to bring markets to things that just haven't had markets before. That's why it's phenomenal, right? There's new supply coming into this, into a marketplace. Yeah, I mean, I love it. I share your optimism. I think it's the fire hose is the right way to describe it, because I think it is so overwhelming to most builders right now that they fully haven't grokked this change that's coming. If there's an intuition around it, obviously we still have to wait. I did have a chance to listen to one of the CFTC commissioners speak last week, and that was when the market structure bill dropped, which I recommend everybody reading. Everybody read. It is thrilling. It's not thrilling. But what she said was great. If even in an optimistic sense, if we go get this passed this year, there's still a multi-year process ahead of us to actually get the CFTC rules written and implemented. And so I think we're unfortunately going to be in a gray area for much longer. I'm not sure I shouldn't say unfortunately. I'm not sure that's a bad thing, because a SEC that's not on the warpath and some gray area might actually allow us to push into some really interesting angles. But I do think like this stocks on chain and the broad ability to represent that as tokens and for retail to buy, etc., is coming. It just might take a bit longer than we all want. Nice. I want to give a shout out to Proof and Team, whatever, who are building DX Terminal. They launched yesterday. People seem to be loving the AI agents rocking and rolling. We have a bunch of updates from our portfolio that I think we'll maybe just jump into next week, so I don't miss out on anybody. But it feels like we're back in play mode here on the timeline, which I very much love. And I mean, there's, I think, truly no better time to come out and build the thing that you've been thinking about.
Yeah.
The world's waking up to all this stuff.
Yeah. Yeah. Like it feels, again, it's the best landscape we've ever had for this. I think there's a lot of, I think there's just a lot of factors that have happened over the past few years, and a lot of changing happening right now in a macro environment, that of course influences this. But I've never been more bullish on kind of this space, and the opportunity that exists within this space now, for sure.
All right, man. Appreciate you jumping on here today, keeping us in rant mode. It's a good rant mode episode. Should give Jarrod a follow. We'll bring up his Twitter here, and I love seeing you back in the writing game here, man. Always a good sense making value to be created there. Peace. Is there anything I need to shout out here because my brain's dead?
No, I moved all my stuff to Paragraph, so
nice.
I've been talking to that team, and I'm trying to be more consistent. I'm trying to go back to 1 or 2 a week. So
I spent a bunch of time with Colin this week. They're working on some cool stuff. I like Colin and the vision they have there. So good to get onto Paragraph. Peace. Did I forget anything? Any shout outs? Are we cooking on anything? I mean, crowdfund continues to be. I mean, geez, people are just. We launched this mini app crowdfund a couple of weeks ago. People were using it before it was even launched. The goal is really just to be the cheapest, easiest way to go crowdfund a thing. Spun it up in a very quick time, and it's a mini app on Farcaster. People are just using the hell out of it, which you love to see. Is that internet capital markets piece?
It's adjacent. It's what happens after.
I love it. All right, folks. We'll be back next Friday, 10 a.m. Pacific, 1 p.m. Eastern, with all of the crazy shit that's going to happen next week. Make sure to go give Jarrod a follow. It's Dark Star on the internet. And yeah, subscribe to this Paragraph. It's dude spends a lot of time thinking about stuff and can write well, which I love.
Thank you, guys.
All right, man. We will see you on the internet, and we'll see you all next week.
Thank you. Ciao for now.
Bye, guys.
Internet Explorers.